Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, in the wake of the federal budget, bank stocks have come under pressure given their exposure to the property market and changes to capital gains tax. Thomas Atkinson from FX Evolution takes a look at the largest bank, CBA, which he says has been volatile for some time.
And then all of a sudden there's extreme amounts of volatility in the stock, which we've actually seen now for well over 6 months in CBA. Then that tells me that somebody's looking at it maybe more fundamentally, maybe a larger fund, and they're saying, you know, maybe we want to trim or something like that. And that shows itself in the technical analysis, which I think is why this is so exciting to be able to view this type of stuff in charts. Now, that has been what we've seen. Yes, this was, I think, a historic sell-off day, over 10%, I believe, on CBA, the biggest since maybe 2020. And this was another sign of extreme volatility. Now, we're trapped between kind of two prices, 180 on the top side and around 150 on the bottom side in terms of major support. This is actually a monthly chart, so it's a significant chart. And if markets close underneath that, then we might be seeing CBA reprice itself down to, you know, technical levels of around 135 or something. So the problem for CBA has been it's priced very aggressively. Now that, of course, the budget's out, now that we're seeing some, people looking at it fundamentally, I'm sure that that's repricing it. But from the technical level, 150 is the all-important zone for us to watch.
Well, iron ore prices have held up since the beginning of the war in the Middle East, and the largest miners have all been moving higher. However, Thomas Atkinson notes that Fortescue has been underperforming BHP and Rio because it lacks the diversification of other metals such as copper.
Fortescue has come back up to a very important level around this $23 mark. And there's a couple of nice technical things that have happened more recently. We've been on the show talking about this, I think last time, about 3-4 weeks ago, when we discussed the idea of Fortescue again. And what we saw back then was that yellow line, the dotted one, that's a downward trend line. And we saw a close above the downward trend line. And that is, in the technical terms, kind of a small time frame change of trend. So we have a series of what is downward trend, and then that kind of confirms to the upside when we break things like this trend line. So that was a good first sign. Then we saw a bit of a sell-off. It came back down. It tested that level again, and now it's actually had 2 amazing weeks pressuring this 23. Now, I think the thing for Fortescue traders or for people out there that are looking at charts like this, it's the left-hand side that we need to pay attention to. From $23 to really around $26.50, there's not that much technical resistance. So the market fell very drastically last time. If we are able to get through 23, this will be the first time in what, almost 2 years, year and a half kind of time frame that we've been to this level. So maybe Fortescue starting to play a little bit of catch up. It is, of course, cheaper fundamentally than Rio and BHP, but the reason it always has that discount, it always has reasons behind it, plus concerns over, of course, their moves into the energy space. But the thing for Fortescue here is that price action's been very solid this week, and if we can clear this resistance, maybe things are about to improve.
Well, let's now look at the psychology of trading and mistakes that are often repeated, such as letting losses run and jumping out of trades early. Mandy Rafsanjani from Trading Psychology uses trades in Micron as an example.
One particular example is here, Micron. You can see he very early, that was last year, April 2025, you already saw the entry. And he had a stop loss according to Fibonacci Elliott wave, like our friend Tony Sycamore is the master in. He put a stop loss below the 61.8% Fibonacci retracement. But then you can see Micron had a dip down and he panicked. He closed his position early before it could hit a stop loss. And then the trade kept going up. He tried one more time, again, the same thing. On the first sign of retracement, he panic closed. And now that was at 378. Now Micron hit the top of 800. I think it came off last few days, but yeah, he missed out on a lot and it was devastating.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.